Hey guys, how's everyone doing? This is Nick from lunarcrypto.com, and in today's crypto bootcamp, we're going to be looking at risk and trading. Uh, okay, my camera's not frozen. Cool. Sorry we're starting late today, guys. It's unfortunate, but just things got in the way. I had to push it back an hour. I hate doing that, but it is what it is. So today, yeah, we're gonna kind of dive into how I manage my portfolio in crypto. That way, you can maybe get some insight into how to manage yours. I'm going to be talking about trading a little bit, uh, and all kinds of stuff like that. So we're just going to dive straight into it because otherwise, we're going to run out of time. We have about 60 minutes today. I'll be answering questions at the end. Lewis is going to be recording the questions that you guys ask, and he'll make a list and send it to me, and then I'll get to questions at the end. So feel free to ask questions as we go through. I just won't answer them as we go through. I'll answer them at the end. So yeah, let's get into this thing, guys. Well, actually, first thing, just a little bit of a disclaimer for myself. Nothing I say here is financial advice. I'm talking about how I structure my own personal portfolio. Everything I'm sharing here is just my own personal opinion. I'm not a financial advisor. I don't really talk about how to structure portfolios on Forex for Noobs because it's not my job. I just talk about how I trade. So this is the first time I'm talking about this kind of stuff, and I just want to make it clear that for my own protection, obviously, I'm not a financial advisor, and anything I say here is my own personal opinion. It's how I'm doing things myself. Take whatever you want from it, but you have to do your own research into these things. You have to see if it's right for you, and of course, you should never invest money into anything. You should never invest money into anything that you cannot afford to lose. You only invest what you can afford to lose because all investments are risky. So yeah, that's it. Let's go. So like I said, diving straight in, we're going to talk about my portfolio breakdown. So my portfolio breaks down like this, and this is the reason you want to split your portfolio is because time has proven, the last 10 years has proven that holding cryptos is very profitable. So yeah, you can do your trading and all that kind of stuff, but just holding on to cryptos is very, very profitable. Now, you're going to see blue chip hodl. You might think, for those of you who don't know much about crypto, you might think that's misspelled. But I'm just trying to get you guys used to crypto terms. Hodl is indeed a misspelling of hold, but it is one that somehow caught on in the crypto world. I honestly don't really know why or how it caught on. I just know that it did catch on in the crypto world. So now, if you're on crypto Twitter or just talking to a crypto trader, they might say hodl instead of hold. So just keep that in your head. So your blue chip hodl portfolio, that is basically where you hold on to your big main cryptos. We'll talk about that more in a moment when we really get into the breakdown side of things. That makes up about 40% of your portfolio. I'm not sure why I'm saying your, because it's not your portfolio, it's my portfolio. Excuse me, my own personal portfolio. So 40% is I dedicate 40% of my portfolio to blue chip hodls. 50% I dedicate to trading and medium risk type stuff. And we'll get into more what that is exactly. I'll give you a breakdown of what that is. And then Toma, yeah, some people say it's holding on for dear life too, but I'm pretty sure that it started off as a misspelling of hodl. But there's plenty of people who'll say back and forth, who'll argue back and forth on that. It doesn't really matter, honestly. It's not important. It's just hodl, misspelling of hold, or hold on for dear life. Up to you, whichever one you want to think it is. But what it means is to hold on. Anyway, I'm going to stop reading the chat because it just distracts me. So yeah, next is 10% of my portfolio is dedicated to high risk plays. So high risk plays are basically just really, really risky stuff. You do not have to do this. You do not have to do this. You don't have to have high risk plays if you don't want to. Remember, this is my portfolio. It's how I'm managing my own portfolio. If you don't want to do high risk plays, do not do it. You don't have to do any of this. I'm going to keep saying that just to make it clear. Right, so at the end of the day, we're traders. Most of us here are traders. We've got experience trading. So that's why the biggest part of my portfolio is 50% is for the trading and medium risk. That's the more active stuff. Now, let's say we're talking about your own personal portfolio, whoever you are. Let's say you're a person who doesn't have time to spend trading. You have a full-time job. So maybe you would personally want to do like 70% HODL, 20% trading medium risk, or 30% trading medium risk and nothing high risk. So the point is here that you can change those numbers a little bit to suit your own lifestyle, your own goals. But for me personally, this makes a lot of sense. So I'm going to break down each section of my portfolio. And actually, there's one more thing that I forgot to mention. Money. There are some of you out there who have like $500, $1,000 that you feel is safe to invest in crypto, that you're willing and able to lose. Like with any investment, only risk what you can lose. So you have $1,000 that you feel comfortable risking, right? So for you personally, it probably doesn't make sense to split things up this way. Now, that doesn't mean you're not going to get anything from today's session. You should still watch today's session all the way through because it will give you an idea of where you should allocate your funds. For people who have a bit more, something like $5,000, maybe even $4,000, then you could look at splitting it up like you see here on the screen right now. If you have less than that, it might not be ideal, but still watch because I'll break down what each of these sections are for, what each of these portions of the portfolio are for, and you can decide where you want to allocate your $1,000 or your $2,000 and how you want to split it if you're splitting it at all. And we could also help you in the Discord group if you have any questions later. So we'll talk about blue chip holdings first, or blue chip hodls. This is where you hodl onto your blue chip cryptos. The list below, this can change at any time. It's not set in stone, but if you go to the Discord group, there is a section of the Discord group where we have what we feel are blue chip cryptos, and that list is going to be updated regularly. If the blue chips change, if something changes, that list will be changed. So blue chips are usually found on the top 30 list on CoinMarketCap. So I showed you CoinMarketCap yesterday, and I think the day before too. It's just a very useful website. It basically lists cryptos by their market cap. So CoinMarketCap is useful for that. Usually most blue chips are going to be in the top 30 on CoinMarketCap. There are a few instances where a blue chip is not in the top 30, but it's not really that common. So I'm going to go through each of the blue chips right now. The first one is obviously going to be Bitcoin. First one's obviously going to be Bitcoin. No brainer there. It's the biggest crypto. If you're trading crypto, you should hold some Bitcoin. The next one's going to be Ethereum. Now, Ethereum is the second biggest crypto in the world. If you're trading crypto, you should hold some Ethereum. Solana is another one. This is one of my favorite cryptos right now. I think this one has a bright future. Dot is another. This is probably. All right, so Solana is probably my second. It's hard to pick between Solana and Dot, but I would say if I really, really had to pick, Solana would be my second favorite and Dot would be my favorite. Why aren't they at the top of the list? Because BTC and ETH are, the biggest, and they're always going to be, well, not always, but for the foreseeable future, they are going to be the safest. Solana and Dot are not as safe, but they're my favorite technology-wise. I think that they have a huge future. Then we've got ADA. ADA is a bit boring, doesn't move much. But that's what you want from a blue chip, though. You want something that's not crazy volatile. You want something that holds its value, that goes up with time. And I believe ADA will go up with time, even though it's been quite boring for the past few months. I believe that it'll go and break that $3 all-time high it set. And then we've got Avax. Avax is a really exciting new crypto. It's third on my list. So we got .sol Avax on the ones I'm most bullish on out of the blue chips. Sol.Avax, I think those are going to be the biggest earners. I could be wrong, but that's the way I see it. Avax, in fact, hit an all-time high today. Just made a new all-time high. So then we've got the other ones. So if I was starting off a new portfolio, personally, and I had a few $1,000s, I wanted to allocate 1,000 to my blue chip hodls, I would go into these top 6 first. I would split evenly between these top 6. If I had a bit more money, if I had 2,000, 3,000, if I was a person that had a decent amount of money, then I would consider the ones at the bottom here: Matic, Luna, Atom, Link, XRP, and LTC. XRP and LTC, they are one of the older cryptos, but they really do not move that much. And see, the thing is, people in crypto can get very tribal. They can get very tribal and very angry. If I were to say to someone who's been in crypto for a long time, who loves XRP, that I don't really believe XRP is a very, very good crypto, I don't think that it's going to appreciate much in value over the long term, that would drive some people crazy. They would actually start shouting at you saying you're wrong, XRP this, XRP that, blah, 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 blah. I'm just sharing my opinion. That's what I think. I don't think XRP has a huge future. I could be wrong. I've been wrong before. So that's why it's the bottom of my list of blue chip hodls. Do your own research though, guys. Really, do your own research. Look into it. Maybe you disagree with me. Maybe you think XRP is the best blue chip crypto on the planet, and you want to focus on that instead of BTC, ETH, Solana, or DOT. Totally up to you. Same goes for Litecoin. A lot of people love Litecoin. A lot of people hate it. So you decide, you do your own research. But this is the way I see it in terms of blue chips. If I only had $1,000 to put into my blue chip portfolio, I'd split it between these 6. And if I had more than that, then I'd start looking at the rest of those. But these 6 are the top ones. They get the most allocated to them. So there we go, blue chips. Right, so next we're going to talk about the medium risk portfolio. Now the medium risk portfolio is something a little bit different. Actually, let's go back to the blue chips just for 1 second, because I forgot to say something. First of all, blue chips are something you don't really touch much. You buy them, you hold them. That's it. That's why they're a hodl. You buy it and you hold. If you have reason to believe the crypto market is imminently going to crash, I'm not saying that you cannot sell your blue chip hodls. I would sell if I really thought the market was going to crash. I would sell and buy back in cheaper. But generally speaking, you do not mess with these that much. You don't mess with these that much. They are just buy and hold, like like some people do with stocks. They have a stock portfolio, they buy, they hold over the long term, and they don't mess with it. And the last thing that I forgot to say is, do not just go and buy these cryptos today without looking at a chart. Do not do that. A lot of them are pushing up to all-time highs. Solana, Avax, DOT is close. Solana, I think, has fallen back down, but it doesn't matter. The point is, they are pushing up to all-time highs, so it might not be the ideal time to jump in. Avax especially has made a new all-time high today. Might not be the best time to get into Avax right now today. It just probably isn't the best time. So don't just blindly go in and jump into them because I'm saying that this is how I make up my hodl portfolio. You should look for an ideal entry, as always. Look for a dip when things come back down, when things pull back. That's an ideal entry. Getting in at the top of a rally, not the ideal entry. Right, so let's go on to medium risk portfolio. For me personally, this is the most important portfolio. This is where I do my trading. So you can trade any style you want in crypto. Crypto is really like I was showing you yesterday. Yesterday we were talking more about kind of day trading, because we were looking at like 4-hour charts and talking about holding for a few days. So it's more so day trading verging on swing trading. It was kind of like a mix of the two, because some of them were held for just the day and some of them were held for a few days, which would go over into swing trading. So that's what we were talking about yesterday. But there's totally the possibility to scalp in crypto. I know a few people who are scalping crypto on the 1-minute chart, doing it successfully. So there is that opportunity too. That is where that 50% that I allocate to my medium risk portfolio, that is what I do with it. It's for swing trading, day trading, scalp trading. We'll take a look at a few examples. I don't do scalp trading yet, so I don't know why I said that, but it is there potentially for scalp trading if I do want to do it. But swing trading, day trading, that's the kind of stuff I do with my medium risk portfolio. Also buying and selling NFTs. We'll talk a bit more about NFTs later. This is a controversial subject. Not everyone is into NFTs. Not everyone believes in the future of NFTs. A lot of people think they're a scam. Whatever, your opinion. You don't like NFTs? Don't buy them. No one's forcing you to. No one's telling you to do it. You buy what you want to buy. There are a lot of risks with NFTs, which we can talk about in a future webinar or on the Discord group. There are a lot of risks with NFTs, and for most of you starting out, it might be better to just stick to the cryptos. I'm just putting that in there because that is what I do with my medium risk portfolio. I buy and sell NFTs. So one other thing about medium risk, you can have blue chips in there. So if you see a great setup on Ethereum that you want to swing trade, you want to day trade, you don't say, well, Ethereum is a blue chip, so I can only use it, I can only trade on my blue chip hodl portfolio, because your blue chip hodl portfolio is for just holding on to these long term. Your medium risk portfolio, that's different. That's for trading. So I would happily take a trade on Ethereum. I would happily take a trade on Solana on my medium risk portfolio, even though I have all of those in my blue chip hodl portfolio. So that's one thing to note. And yeah, you can trade any style you want on this portfolio. This is just the funds I dedicate to trading. That's 50% of everything. I'm able to trade them any way I want. And we're going to show you how to trade different styles, swing trading, day trading, scalp trading eventually. We're going to show you how to do that on the Discord group and stuff like that. And also we share the cryptos we buy on the Discord group. So guys, that is your medium risk stuff. That is how you should handle medium risk. That is how, I keep saying you should, that is how I think, personally, my opinion, you should handle your medium risk. Ultimately, it's up to you how you handle things. Next is the high risk portfolio, which is controversial. But this is why I dedicate 10% of everything. 10%, that's all. Small percentage to high risk plays. So high risk plays, they are just like high risk cryptos in general, which is generally buying a crypto with little to no research. That's just a high risk play, right? That's just a high risk move. You don't know anything about the crypto. You don't know about the team. You don't know anything about it. It's not one of the top 50 cryptos. It's not even one of the top 500 cryptos. It's way down the bottom of the list. And you see someone on Twitter say, hey, I'm buying this coin. And you're like, I don't want to miss out. You can do that, right? And I say this is controversial because I've been saying to people for a long time not to do that in Forex. But I'm starting to come to the realization that it's impossible for some people not to. And also, it's kind of fun, really, to just jump into some risky cryptos. And I've made ridiculous returns doing so in some cases. Although it being high risk, obviously there's a high chance of losing your investment too. So the way I'm doing things now is I'm just dedicating 10% of my portfolio. So I have the discipline to not put in more than 10%, right? And if I lose that money, it doesn't matter. It's only 10% of my portfolio. It's not like I want to go ahead and lose 10%. And it's not like I would lose all of it, because I'm not risking the whole 10% on a single trade, a single high risk trade. Obviously not. But if I want to get into something risky, maybe like a tenth of my high risk portfolio, boom, I can put it in. Again, this is controversial. You don't have to do this. If you don't want anything to do with high risk stuff, if you think it's bad for you because you can't control yourself, because you're not going to be disciplined enough to only risk, that 10% and stick to that, then don't. This is something that I'm finding useful, and I'm finding fun, really, and I'm finding profitable. But I know that I could lose that 10% just as easily as make crazy returns. So, an example of a high risk play would be something like SHIB. Now, a lot of you maybe heard of SHIB, a lot of you maybe haven't heard of SHIB. SHIB is a crypto that is known as a meme coin. It doesn't really have that much value, and again, saying that will get you in trouble with a lot of people who are invested in SHIB. They'll say you're wrong, but my opinion, it doesn't have much value. It's a meme token. It's kind of useless. It's kind of pointless. Sort of started off as a joke, really, like the first meme token, Dogecoin. But that being said, if you bought $8,000 worth of SHIB in January of this year, that would, I'm not sure about right now, but as of like 5 or 6 days ago, it would have been worth $5.7 billion. Billion, not million, billion with a B. 8,000 in January. What are we? We're in November. Has become 5.7 billion. That is an example of a high risk play when it goes well. I have an example personal of a high risk play that went well, where the most I exited with, I've talked about this before in these webinars, was around 914 times my investment. So, and that sounds like, you might not believe that, but I posted this to the Telegram group where there was hundreds of members of Forex for Noobs there, and a lot of them got in on it too. So anyone out there who was in that room a few months ago when I got into that can vouch for me on that one. So that was a crazy high return crypto, but that's something I consider high risk, very high risk, and that could just as easily have gone bad. That's why I don't dedicate a whole lot of money to high risk. It's 10% of my portfolio, but I never really use all of that 10%. I never really use it all. I use maybe like 4% at any one time, and that's pushing it really. So you could probably say that like 5% of my portfolio is dedicated to high risk. I have that extra 5% there, just in case. Also, I have that extra 5% for. Never mind. I don't want to get into the weeds with what I was just about to say. It's not that important. So a high risk portfolio, if you want to have one, dedicate a small part of your portfolio to it, 5%, something like that, 10% if you want one. Don't go like crazy. Don't say 30% of my portfolio is high risk. That's silly. That's it's gonna really, really cost you money in the end, I believe. Unless you get super lucky and you buy $8,000 of SHIB back in January and you are now a billionaire. If you get super lucky, you get super lucky, but most people don't get lucky. There was like 1,000 coins that you could have bought in January. If you picked that one in 1,000 that turned into 5.7 billion, you got lucky. If you didn't, then you probably would have lost the 8,000. Most people would have lost the 8,000. So that's why it's high risk. And I know I say 8,000 like that's a nothing number. It's just because there's a verified example of someone who who spent 8,000 on that coin and now has 5.7 billion. Because crypto is all it's all public blockchain, we can see that a purchase was made in January for 8,000 and it is now worth 5.7 billion. So that is publicly available information. Right. The other thing to note about high risk plays, why they are high risk, is there's a lot of cryptos out there, especially if you're going really to the bottom of the list of crappy cryptos, that you'll get in, then the developers will sell everything and the crypto will go basically to zero. That can happen in crypto. That is why I have a high risk portfolio. And when I say crypto, you know how I've been saying in these webinars, crypto has less risk than Forex because it can't really go to zero. That is mostly true, but if you go and get into these really crappy cryptos, these really crappy high risk cryptos, they can, in theory, go to zero. It's called a rug pull because the rug is pulled out from underneath you when the developers of a crypto just take all the money. But you don't have to do that. You don't have to deal with those cryptos at all. So you don't have to worry about that. If you stick to the top 50, then you're good. If you stick to the top 30, you're even more good. So the choice is yours. The choice is yours, guys. But if you go high risk, make sure you keep it safe. You keep it small, rather, not safe, because you can't keep high risk safe, but you can keep it small. So medium risk portfolio breakdown. Now, this is where we start to really get into how I manage my medium risk portfolio. And I'm going to talk a little bit about why I manage it in this way. So first is, cool. First is general. Now, general is just like your whatever cryptos. Like whatever crypto that doesn't fit into one of these other categories goes into general. So right now, and this is updated as of mid-October. No, more like the start of October. Oh God, time flies by, doesn't it? So since the start of October, this has switched up a little bit. I'm now dedicating 40% of my portfolio to gaming cryptos. Sounds like a lot. I know it sounds like a lot, but I really believe gaming cryptos are going to be the next big thing, and we'll talk about that more in a second. I'm dedicating 40% of my portfolio to gaming cryptos, 30% to just your general cryptos. So you'll learn more about what exactly those are in the Discord group, but it's just your general DEX cryptos, or just anything really that doesn't fit into the other categories. I'm dedicating 20% to NFTs. That's because I think that NFTs are going to be huge in future. It's just my personal opinion, really. I was really, really against NFTs. I got into NFTs late. I've been quite lucky because I got in late and I managed to still get some really good NFTs. But I finally kind of saw the light with NFTs. Like it finally started to make sense to me. And it really comes down to them just being collectibles, and people are crazy about collectibles. You know, when you think about, baseball cards, basketball cards, Pokemon cards, which were big when I was growing up, Pokemon cards these days, some mint edition Pokemon cards, they go for something like $20,000 or something for a Charizard. Charizard? I don't even know how you say it properly. So, when you look at it that way, NFTs are collectibles, and people get them to brag about having them, or just because people like to collect stuff. Then it really for me personally, that's when it really started to make sense. I passed on the opportunity to spend $10,000 on a NFT called Bored Ape Yacht Club, just because I was looking at it and I was like, what kind of a sensible investor would spend $10,000 on an image of an ape, of a monkey, a cartoon image of a monkey? Then flash forward 1 month and they're worth 100,000 plus. So I essentially lost out on the chance to make $90,000 because I didn't really think that they were going to do anything. I was wrong. I am often, and this is what me and my team always say, I am often wrong. We are often wrong. Can't be right every time. You can't get them all right. I missed out on that opportunity, and I'm not going to miss out on them again. That's why I dedicate 20% of my portfolio to NFTs. You don't have to. There are risks involved with NFTs. The main risk with NFTs is you can't sell part of them. So if you buy an NFT, which is essentially an image, if you don't know what I'm talking about with NFTs, I'll get over this subject quickly. It's a whole webinar in on itself, but a lot of you might have heard about them, so that's why I'm talking about them. But I'll get through this quick. If you buy an NFT, it's essentially an image. You can't sell part of it. Whereas if you buy a crypto, let's say you buy like, I don't know, 1,000 ADA, Cardano ADA, you can sell 500 of that, no problems. You can sell one of that, you can sell 50 of that, you can sell as much or as little as you want of it. You can sell half an ADA if you want to. Whereas an NFT, it's either you own it or you sell it, and there has to be a buyer willing to buy it. So it's risky from that aspect. So NFTs are something you might just want to completely remove from this chart here and dedicate that more to general. Maybe put 10% of that in general, 10% of that in gaming, or 10% in passive, 10% in general, which brings me to passive. In cryptos, there's this cool concept of passive income. You can stake your cryptos. Again, if you don't understand what these words mean, staking and stuff like that, I can't get into like all these details. I know there's some of you who have heard of this before, so I'm just kind of going through it quickly. But if there's anything that really confuses you, don't worry. Just in the Discord group, we'll be talking about it more and more. There is a channel in the Discord group dedicated to staking, where people who are big into staking discuss these things. But staking, just as a quick example, you buy a crypto, you stake it, as in you give it over to a website. They can't steal the crypto. It is locked into a smart contract. They cannot steal it. They can't take it. They can't walk away with it in like 99% of cases, but I'm sure there are some where, some crappy websites where people have been screwed over, but I've not really even heard of one. Once it's staked in a smart contract, you can take it back at any time, unless when you staked it, there was a lock-in period of, let's say, 30 days, then you can't take it back for 30 days. Sometimes there's a lock-in period for 30 days where you can take it back, but you have to pay a penalty for taking it back. So staking, basically you stake it and you get a return for it. One of the most popular staking cryptos is called Cake, C-A-K-E rather. That gives you 93%, I think at the moment, last I looked, 93% APY, annual percentage yield. So you put in $100 into stake, you're going to have 93% on top of that, so $193 thereabouts. It varies, so it's not going to be exactly that, but by the end of the year, you should have almost doubled just by holding it there. And the reason you're getting paid this is because by staking, you're facilitating transactions on that network, on that blockchain. Again, this might sound like complete gibberish to you. It might not make sense. On the Discord group, we'll talk about it there. It'll make more sense. The main take home right now is that I dedicate 10% to passive income generation in crypto. And there are some absurdly high return passives that give you like a few $1,000% per year. I know it's hard to believe, but it's just the fact. That's why I tell everyone crypto is so crazy, because there's so much stuff that's hard to believe, but it's just fact. It's just there. I've been invested in these things and I'm earning 3,000% per year on some of these things, and it works fine. There's members of the Discord group that have no association with me, and there's one guy, I'm not sure if he's here today, he's probably not, because he's pretty deep in cryptos, but I think he said he was earning like Lewis Lancer in the Discord group. What was he saying the other day? $1,000? per day, or was it 1,000 per week? I'm sure Lewis will answer. And you can see that. That is, yeah, just some guy in the Discord group. And he's a pretty helpful guy, so I'm sure he'll be happy to help and explain how he does that. But yeah, that's why I dedicate a percentage of my portfolio to staking, because it can bring in some pretty consistent returns without you having to do anything. So this is my medium risk portfolio breakdown. 10% of it goes towards passive income generation, which is staking, yield farming. You'll learn more about that in the future. 20% to NFTs, general, just every other crypto, and then gaming. That's where most of my money goes. Why gaming? Let's talk about that real quickly. 1K per week. That sounds way more. I was thinking, was it 1K per day? That sounds like a lot. So 1K per week. So crazy. The Luna wallet is what we're using, right? No, there is no Luna wallet. I've got no idea what you're talking about. So I just saw a question come in about a wallet. Watch the first day webinar. We talk about wallets in that webinar. I'll be sending links to the recordings to all of these later. Right. So why do I dedicate 40% of my medium term to gaming? This is a new thing that I've been really doing since October. The allocation to gaming was less before then, but I think gaming is the next sector that's really going to blow up in crypto over the next 2 to 3 years. I think any investment made into gaming now, if you're picking the right gaming tokens, could literally, my own personal opinion, that's why I'm investing in it. You don't have to listen to me, do your own research. My own personal opinion is a lot of gaming cryptos can be worth 1,000, 2,000, 3,000 times what they are now. I know that sounds absurd, but there's been cases of that already. Axie Infinity, I think that was worth 2,000 times the price it was when people first got in. Crypto Blades, I think, was worth 7,000 times what it was when people first got in. And these are just the first generation of gaming cryptos. They're absolutely atrocious games. Atrocious in the sense of, like, if you look at any computer game or Xbox game, whatever platform you play on, if you are a gamer, and you look at these games that have made 7,000 times returns, you'll just think this was a flash game from the 90s. It was like literally a flash game that appeared on websites in the 90s. That's the level we're talking about of games that have made these kinds of returns. So in my personal opinion, the next games that are coming that are actually real games, like real computer games that people play, they're going to make those kinds of returns. I really think gaming will blow up. I also think that if BTC goes down, like let's say Bitcoin loses like 50% of its value, it has a major retrace, right? I think that gaming is going to be the first sector of crypto that really decouples from Bitcoin, because the gamers who are going to be playing these games and earning money playing these games, which is one of the cool features of crypto games, you earn money by playing. The gamers who are playing these games, they don't care about Bitcoin. A lot of them, they don't care about the value of Bitcoin. They're not there for Bitcoin. They're not there for. They're just there to play the game and earn some money. So I see this sector decoupling from Bitcoin. Now, please don't get me wrong. I'm not saying that if you invest in a game today and then Bitcoin crashes 50% tomorrow, the value of that gaming token is going to stay up there. It's not. It's going to go down. It is going to go down. But over the next year or two, I really see that no matter what Bitcoin does, they're going to break free at some point. Right now, it's not ready yet, but at some point they will break free. And it could be a case where Bitcoin crashes to 50% down or something like that over the next, 4 months. I'm not saying it will, I'm just saying as an example. We could have a scenario where Bitcoin does that, and then after that happens, the gaming cryptos decouple from Bitcoin and start doing their own thing. Because right now the market is still very much tied to Bitcoin. If Bitcoin crashes, the party stops. All the other cryptos go down, almost all of them. I think I think gaming is the first that will decouple. Along with NFTs, I also think there's huge potential for NFTs to decouple from Bitcoin. So yeah, that's why I'm so bullish on gaming. Uh, and I also feel that I'm very good at identifying gaming projects just because I've been a gamer my whole life. So I have that kind of I have a bit of an eye for gaming, if that makes sense. And I see the potential there. And the potential in each game. I could look at a game and see its potential. A lot of people can't do that because they've not been gaming. They're not gamers. But yeah, in the Discord group, I share all the ones I enter anyway. But mostly Lady of Crypto, who was a friend of mine, she shares the games mostly. We all work on the research together, and then she takes that side of things. One last thing to note about gaming, guys, is if you looked at the statistics, there's over 2 billion gamers in the world. Some statistics say as much as 3.2 billion gamers in the world. I don't really know what they class as a gamer when they say 3.2 billion of them. If they class like a 60-year-old woman who plays some Facebook game on her phone as a gamer, then yeah, possibly there's 3.2 billion. I think that number is a little bit blown out of proportion. But whatever it is, there are several billion people who actively game. A lot of these people are in Asia. Huge amount of gamers in Asia. So there are loads and loads of people who game. And there's about 100 million people in crypto from the statistics I've seen. So when you think about potentially just a fraction of that 2 billion people, let's say, moving into crypto gaming because they can, number one, earn money from it. And number two, the games are going to get good and they're just going to start looking like games that people want to play. And also big game developers like Ubisoft, if you've ever heard of them, they're like one of the biggest, not developers, they're publishers. One of the biggest game publishers on the planet. They're talking about getting into crypto gaming, adding play to earn to their games. So it's only a matter of time before these two worlds merge, the 2 billion gamers and 100 million cryptos. A lot of the gamers are going to be moving into crypto just by playing these games. Again, another reason I'm so bullish on gaming. So that's why 40% of my portfolio is dedicated to gaming. And that's why I think gaming is low risk at the end of the day. Yeah. So that covers everything with gaming and with my medium risk portfolio. We're just going to finish up with just a few things of how to stay profitable. That's not supposed to say finances, but whatever. I use this slide software to create these slides. I didn't change that word. Doesn't matter. Number one, review your portfolio often. Guys, it's really, really important to review and track your portfolio, your crypto portfolio. You need to review it often. When I say review it often, just think back to what I said like 10 minutes ago, where I said, at the start of October, I allocated more of my portfolio to gaming. Before then, it was a smaller percentage of my portfolio. Now it's a much larger percentage. The reason for that is because I reviewed the crypto market. I looked at what's happening and I decided, hey, gaming is the next big thing in my personal opinion. So I dedicated more of my portfolio to gaming. I do this. The plan is to do this once per quarter, review my portfolio. And that's also keep up with the latest trends. You just have to keep up with things in crypto, what's changing, what's new. Right now, passive income cryptos that we were talking about, 10% of my medium risk portfolio is allocated to passive income cryptos. So you just need to keep up with the trends and see what's popular, what's hot. Again, the Discord will help you with this because we're doing that and we'll share that with you. Accept volatility. This is one volatility. That is just fantastic spelling from me. I made these slides in a rush, guys. I'm sorry. I'm not great at making slides, and apparently there's no spell check in this except volatility. I'll go to that question. I see that question. I'll get to it at the end. So accept volatility is what that's supposed to say. Look, cryptos is volatile. Bitcoin could drop 30% in a day. If you're not willing to accept that it can get that volatile, it can get that shaky, cryptos is not for you. It really depends how you look at it and how you trade it. If you are approaching each one as just a trade where you set a stop loss, then it's okay. But as investments, a lot of people aren't willing to accept that level of volatility. So either accept it or don't invest in crypto. This doesn't mean you can't trade crypto. Trading is separate, because the trading, you set your stop losses like we were talking about yesterday. Totally cool. You can trade crypto, but if you're not willing to accept volatility, don't invest, which is, the HODL portfolio, right? Don't do that. Diversify your crypto holdings. This is why I talked about looking at different sectors and having different portfolios. So you want to have your blue chips, you want to have inside of your medium risk, you want to split that down further into gaming and into what you think is going to be the best. You want to put something into NFTs, maybe, if that's your thing, because they might decouple from Bitcoin. Look, diversification just in general is a good thing. Let's say you have like 10,000 to invest. You don't want to invest 10,000 in crypto. You want to put a few thousand in crypto, a few thousand in gold, a few thousand in the equities market. You diversify your holding, something in property, however you want to do it. Like I say, I'm not a financial advisor. I'm just saying diversification is a rule of thumb. Diversify your investments. Don't go all in on crypto. That's silly. So diversify your investments in general, but diversify your crypto investments too. Diversification is key in general. And number 5, take profit. I can't stress this enough, guys. Take profit. It's so easy to get greedy in crypto. It really is so easy. When you're in a crypto, I'm going to switch over to my charts real quick right now and talk a little bit about show you guys some examples of recent trades. I'm going to move this light. I got given this light when I did some speaking event, and they said that when you're on webcam, it's good to have a light in your face, but I can't really see my charts with that light in my face, so I don't even know if it's good. I don't know if it makes a difference. Just switching over, guys, real quick. Give me a sec. This one, what I talk about now might just be a little bit hard to understand. It might not make... it might be a little hard to just understand the basic concept here. But... yeah, you can see that. Cool. But... I'll try my best to explain this properly. So, in crypto, you want to take profit. You want to take profit when things start moving up. Doesn't matter if it's an investment or a trade. Trades are dealt with differently. There's different style of profit taking in trades. We talked about that more yesterday. You set a take profit and you get out. That's more your traditional Forex type trading. So that's not what I'm talking about right now. Right now, I'm talking more about things that you want to hold for a long time, how to scale out of a position, taking profit out. A lot of people screw up because they don't take profit, and they screw up really badly because they don't take profit. So I'll show you exactly why they screw up and exactly how not to be one of those people on this chart. This crypto is called NAKA. NAKA. It is a gaming crypto. It is a gaming crypto I'm invested in. I think it has a bright future. Now, we first shared this one to the Discord group back, I believe, when it was $1.30 to $1, something like that. No, sorry, not $1. That's not true at all. $1.20 to $1.30. So down here at $1.20 to $1.30. Now, just imagine it was $1 for the purposes of this example, just because $1 is an easier number to work with. It wasn't a dollar when it was first shared. It was $1.30, but let's just pretend it was a dollar. So we got into this one at a dollar, even though we didn't. And it went up 427% at its peak. Now, I'll tell you what newbies do. They get in at a dollar, goes up. So they put in $100, let's say, goes up, it's worth $200 because it's up 100%. 300% is worth $300. 400% is worth $400. And they're like, oh my God, I've made $300 on this trade. It's going so well. And they just get greedy. They're like, well, if I hold it, it's going to be $1,000 soon. They don't take money out. And then boom, it goes down. And then they're like, oh, it's going down. It's going down. I'm going to take all my money out before it crashes. And they take all their money out there. And then it goes up. So yeah, they made like a $200, $300, whatever. But they missed out on the overall big move here. They missed out on getting out at the top, which they could have done if they wanted to, really, which would have been quite profitable, obviously. And they also miss out on the opportunity to make more when it eventually keeps moving up, which I personally believe this one's likely to do. So that's how newbie traders or newbie investors do crypto. Some do it even worse, where it goes up and then they're like, it starts crashing and they're like, oh, I'll turn around, it'll turn around, it'll turn around, it'll turn around. And then it never turns around. It goes back, it goes way lower and they lose everything. Or they lose all the profit they would have made and it goes down like 70%. And then they're 70% in a loss in that position. Their $100 is now 70% down. They've got $30 left in that position. You don't want to be that person. You don't want to be up 400% only to have it turn around and be down 70%. That is how newbies do it. You don't want to do that. So I have a very, very simple, quite aggressive profit-taking approach. You don't have to follow the way I take profit, but it's just the way I do things. I think it's quite good. I think it's the right way to do things. I just had to turn the log scale off. When you put log on, logarithmic scale, I won't explain exactly what that is. Things get a bit weird. Log is kind of okay, better technically for crypto, but I hate how it affects things when you move them around. So I'll turn the log off for a second here. Let's just pretend our entry was, just for the ease of numbers, entry was right at $1. Right, so our entry was there. It couldn't have been there because it wasn't never there, but just pretend it was. This is the kind of investment where I wouldn't really have a stop loss, but I wouldn't have a stop loss because this isn't a trade as such. It's just I'm buying this crypto as an investment. So I wouldn't have a stop loss in that traditional sense of Forex, where I wouldn't have a stop loss in that sense. But what I would do in a case like this is just say to myself, if it goes down 50%, I'll probably sell this. So that would be down to 50 cents. I'd probably sell this. I know it sounds weird me saying don't use a stop loss, but you just got to separate these two things. This isn't a trade like we would do in Forex. This is more of an investment. You're investing in this crypto, so it's a different thing. That's why I'm saying you don't really need a stop loss. You can just say when it goes down around 50%, I'll close it out. It's always good to have some sort of automatic order to close you out, because if it crashes while you're asleep, at least you get closed out. But it's not really a stop loss in that normal sense of the word. So anyway, things go up 100%. So your $100 that you entered here, your $100 is now worth $200. So at this point, I take out 50% of my profit. What does that mean? That means my profit is $100 on top of the 100 I put in. I take out 50% of my profit, not 50% of the entire position. 50% of the entire position would be $100 because it's worth 200. 50% is 100. But 50% of the profit is currently floating at $100 because I put in 100, it's floating at $100. I take 50% of that $100, which is $50. I'm now left with $150 in that position. So basically, this was worth $1 when I got into it. Sorry guys, my dog is scratching at the door. I don't know if you can hear that, but if you can't, ignore it. This was worth $1 when I got into this position. It's now worth $2 per coin. I bought 100 coins at $1. Now I'm selling 50 of them at $2. Sorry, 25 of them, I meant to say, at $2. Why am I selling 25 of them? Because 25 equals $50. When this is worth $200, if I want to sell 50% of my profit, that is 25 coins. I'm selling 25 of these NACA coins for $50 because they're worth $2 each, and that represents 50% of my floating profit. I hope that makes sense. Going to get a bit more confusing. Now, when NACA is worth $3 each, so that means it started off $1, it's then worth $3 each, which is up here. I'd take out an additional $50 because I put in 100. What I'm trying to do here is I'm trying to get my initial investment out of this crypto. I've invested $100. It's gone up. I want to take $100 out pretty much as soon as possible, because then all that's left in that investment is profit. All that's left in that investment is profit. So I start out with 100 coins. By this point, if I take another 50% out, I'd have 58 coins left. 58 NACA coins left. Each one is worth $3. Then it goes all the way up to here, blah, blah, blah. There's more ways to take profit. We can talk about that later, but we can talk about that in the Discord. I'm not going to go too deep into this thing, but the point is, this is a boot camp where we get into the basics. The point I want to make here is, when you're investing in a crypto, your goal should be to take out your capital, your seed capital is what we call it. Your seed capital should come out as soon as possible. Some people will disagree with being this aggressive. You might not want to be this aggressive. Maybe you'll let it go up a little bit more. I think that being this aggressive is good. Getting out your seed capital and then letting the profits run. You can let the profits do whatever you want, because then at this point, if you put in 100, you've taken out 100, and you've still got 58 coins in there, then what does it matter to you if it crashes and is worth 0? Nothing, because you've lost nothing. You've taken out your initial investment. Ideally it will go up and up and up, and that 58 coins will be worth 5,800 one day. Maybe, I'm just saying as an example. It would be great. But you've taken out your initial capital, your initial seed investment, and you can take out more as things go up. We can discuss profit-taking strategies in the future. It's out of the scope of what we're talking about today. We're coming up to the end of this session. So, yeah, there will be a webinar. We will do stuff on research. Don't worry, guys. I'm going to cover everything. It's just we can't cover everything in a boot camp, because a boot camp is just the basics. So here we're just talking about the basics. I want to get people who are interested in crypto are ready to start trading. I want to get them familiar with the basics. So research is a whole thing in on itself. We can't talk about that today. Right. So yeah, that is it for today, guys. That is what I wanted to talk about for today. I just wanted to go over all these things, and we've gone through them. I can show you a few trade examples while we're here, just for fun, why I invest in gaming cryptos. Another thing I forgot to mention about gaming cryptos, I'll get to the questions in a sec. Lewis is going to send me them on Telegram so I can check them out. But while he does that, I'll just quickly say something quite cool. So Mark Zuckerberg has changed Facebook's name to Meta. I think he changed like not Facebook website, but the parent company or something. I don't know exactly. I'm not too bothered with what Mark Zuckerberg does, but the point is, the reason he changed it to Meta is because he is getting Facebook is getting into the metaverse. What is the metaverse? It is like a gaming universe. If you've seen Ready Player One, that's sort of the metaverse. I guess that's what Facebook is trying to build, except like a version packed with ads. Facebook is like the bad guys from that movie, Ready Player One, and from that book. If you want to learn about the metaverse, it's a good movie to kind of get you started understanding just basically what it is. I mean, the real world version that we have today, which we don't really have, but we're going to have in the next like 5 years, is nothing like that. But it's a good indication of what the metaverse means. But Mark Zuckerberg wants to build the metaverse, and he's so much so that he's changed the name of Facebook to Meta. As soon as that happened, what happened to gaming cryptos, especially metaverse cryptos? This happened. Now, we were invested in these cryptos before this happened. We were sharing them before this happened, because we didn't expect Mark Zuckerberg to do that, but we strongly believe that gaming cryptos are a great investment. So that's why we were invested, and we kind of got lucky that they took off that fast. But gaming cryptos have really done well. So just talking about a few of the trade, I'll talk about a crazy one. This is a crazy one. This is an absolutely absurd one. This is one where you're going to be like, Nick is lying. I don't believe that. I got into this one through what is called a launchpad. A crypto launchpad is basically you get access to cryptos pre-release. Before anyone else can buy them, you get access to them, and you can buy a small amount of them, a small amount of them. To get into a launchpad, you have to buy the launchpad token, which right now, the level I'm at, and this is not to brag, I'm just being honest, is $100,000. So out of the reach for 99% of people. Again, not to brag, I'm just saying what it is. When I bought it, it wasn't worth 100,000. I didn't invest 100,000. It is now worth 100,000 because it has appreciated in value. But my point is, I got access to this crypto called Block through there. That crypto called Block is now up at its peak 730 times. So to put into perspective what exactly that means, I was allocated 260 block times 730, 189,000 at its peak. Now, the catch is I can't sell all of that block right away. Because I am a pre-sale investor, I am locked in for a specific amount of time. I get allocated 20% of that and then 20% each month until I reach 100%. So don't have access to all of it, but that's a gaming crypto. But that one's one that just kind of like blew up. They're not all going to do that, guys. Yeah, they're not all going to do that. Seedify is a launchpad I'm invested in. And just to be 100% clear, I don't want to confuse anyone. It's not all my money. I'm split in there with Lewis here in the chat and George, who a lot of you know from Forex for Noobs. We've gone in on this together because we're good friends, and we're sharing the profit from that one. So it's not all my money in this scenario. But it's just an example of what of the absurdity that is crypto. There is another launchpad right now that we got into a little while ago. It's called Flame. I probably have it on my list, but let's just... Oh no, it's not on here. Must have removed it. We got in on this one at $1. That's when it was first shared. It's now worth, unfortunately... Well, fortunately for me, unfortunately for you guys. Sorry. It's now worth $2.40. I was actually hoping that this had dipped back down because it was trending down. So I was really hoping that it had come back down. That way more people have an opportunity to buy into this one. This is another launch pad like the one I was talking about, but not the one I was talking about. It's not the 700 times thing. It's the thing that gives you access to buy a small portion of things that might do a 700 times. I'm not sure what this candle is, but I would ignore that. I'm not sure if that's accurately how much it's gone up. But yeah, we got in at $1 also, and it's now $2.40. Again, we shared this to the Discord before we got in. So, well, that's not true. Generally speaking, you don't share stuff before you get in. You get in and then you share it because just for uh, your own personal funds. If you share something before you get in, then it could go up in profit. So we get in and then we share it immediately. Is how we do it, just as a rule of thumb. Anyway, that's not important. Right. So yeah, that's the Flame Launchpad. Look into it. You would need to buy 10,000 Flame to get a decent allocation, which is $23,000 right now, which is not worth it. But like we'll share any new Launchpad that we're getting into when we're getting into it, when it's at $1,000. Sorry, when it's at $1, like this one was, where at that point it would have cost 10,000 to get a decent allocation in this Launchpad, and then you could do something like me, where I split with Lewis and George over here. If you have some friends you trust, you can split Launchpad allocations, and then you can, whatever. It's up to you. I'm just giving you suggestions. You do it how you want to do it. But we'll share the next Launchpad like we shared this one that we're getting into. Anyway, guys, I'm just going to have a quick look at the questions here on my phone. Lewis has sent them to me. I'll have a quick look and answer them. Can you explain why you recommend both Atomic and MetaMask? It's a very good question. It's something I should have probably covered in that webinar. I didn't really think it through properly when I talked about it. Atomic is more for storing your cryptos long term. If you want to just throw cryptos in there that you're not going to use that much, that's what Atomic is for. Also, not all cryptos work with a wallet like MetaMask. MetaMask is a different sort of wallet. MetaMask is a wallet that... how risky is this? Let me take a quick look at this, guys. Just hiding my screen real quick. Yeah, I don't want to show... Well, no, I could show it without connecting my wallet. That's cool. I'll do it like that. So, MetaMask is a wallet. You know what? This is not the website I want to show. I want to show Ethereum, Uniswap. Let's go to Uniswap. So the type of wallet MetaMask is... MetaMask is a wallet that connects with decentralized exchanges. Now, I've taught you guys about centralized exchanges, something like Binance, like KuCoin, but there's also decentralized exchanges. Decentralized exchanges do not require you to create an account. You can use them directly with your MetaMask wallet. So when you go onto a decentralized exchange like Uniswap, it interfaces with your MetaMask wallet. That's why you want to have a MetaMask wallet. Atomic wallet can't interface with a website like Uniswap. Uniswap allows you to buy tokens on the Ethereum network. So, you could buy a token like, I don't know. It's one I can think of real quick. Actually, one I'm invested in is ACH right here. I bought a little bit of ACH recently. So you can buy something like ACH. You could put in 0.2 Ethereum, because Ethereum's worth like $4,000 something right now. So 0.2 is about $1,000, or something more realistic for most people, 0.0 to $100. And you have to connect your wallet, your MetaMask wallet, which is there. Connect your wallet, boom, it gets connected, and you can do these lightning fast. Well, not on Ethereum, but a lot of times they're lightning fast transactions on a decentralized exchange. So I can buy ACH with my Ethereum on this decentralized exchange. So I would be paying Ethereum, which would go out of my MetaMask wallet, and ACH in this amount, 1,044.36 of it, would be deposited into my MetaMask wallet. Now, this transaction would be done with other people who are transacting ACH, but more likely with the liquidity pool provided by the liquidity pool on Uniswap. So there's a liquidity pool that allows you to buy and sell tokens. Don't worry too much about those details. I'm not going to get into liquidity pools, but that's what the MetaMask wallet is for. You can also do the swap on MetaMask. I've never done that before. I'm sure MetaMask just uses a DEX anyway. It would just have to run through Uniswap or something. I don't. I've never used that feature of MetaMask. I just do it through DEXs. But I don't understand how MetaMask could do anything other than use DEX in order to facilitate that transaction. So it's the same thing. As far as I know, I'm not an expert on that, so I could be wrong. Anyway, next question. Turn my camera back on. I don't know why it's off. I'm frozen anyway, so whatever. Turn it off. I may as well since I'm frozen. Do you think regulation will reduce opportunities? Very good question. Look, the thing about crypto is that I really think it can't be stopped unless... There's two things about crypto, and we're running out of time. So the first thing is, I don't think regulation is coming. A lot of people will argue that it is, but the regulation that's going to come is going to be mainly out of the US, and I'm just not convinced that the US wants to regulate cryptos, and I'll tell you my reason why. The US, especially the SEC, Securities Exchange Commission, there's been talk about regulating crypto, but the biggest asset management firms in the US, what is it, Trinity? Oh, why am I blanking on the name? It might be Trinity or something like that. It's probably not Trinity. The TRA is because they manage $11 trillion worth of people's money. Finity, whatever it is. There's an asset management firm that manages 11 trillion of people's money. These firms, and not just that one, there's plenty of them that manage several trillion. The one I'm talking about is just the biggest that does 11 trillion. They're pushing the Securities and Exchange Commission to allow crypto trading because they see the opportunity. So at the end of the day, in America, and I don't want to offend anyone, but in America, money talks. Politicians, I don't know how to say this. I was going to say that corruption is almost legalized in the US because, as from an outsider's perspective, that's what I see it as. I could be totally wrong, but when I look at US politics, it's almost like if you're a company, you can just pay a politician and they'll vote in your favor. So, or they'll pass bills in your favor. So when you're talking about an $11 trillion company and other companies that are worth $4 trillion and then several hundred billion trying to push the Securities Exchange Commission to allow Bitcoin and to not regulate Bitcoin and other cryptos, I just don't really see them regulating. I could be wrong. That's my opinion. If regulation comes in, will it affect crypto? Most certainly will. It will. I'm not going to lie and say it won't. It will. I still think crypto trading will happen. I think it'll be a bit harder. I think that maybe the government can fully lock it down. It's totally possible. But I do think we'll see that coming. And look, the thing is, I can always just switch back to Forex trading. You know, I've been doing that for 20 years. I can switch back to it. It's no problem for me. I'm going to make the best of crypto while it lasts. If it lasts another 3 months, if it lasts another 30 years, I plan to make the best of it while it lasts. Because at this point, I'm close to getting more than enough that I can just live comfortably off of interest. So make the most of it while it lasts. Make sure you take money out and you turn it back into fiat. That way you're not all in on crypto, and that way if the crypto market does absolutely collapse due to regulation, you don't lose everything. Make sure you take money out. Be smart. Don't be silly. Diversify your portfolio. Don't go all in on crypto. Put some money into other investments. This is why I talk about diversification. Yeah, so hopefully that answers that question. Oh yeah, Lewis said it, lobbying. That's what Americans call it. I wonder how many Americans I've offended today, but from an outsider's perspective, we hear about lobbyists, which are basically people paid by companies to give money to politicians to vote in the company's favor. Could be wrong. I don't know that much about American politics. That's just what we're exposed to here in the UK and what a lot of people here believe. So the lobbyists that are getting paid are probably going to keep crypto unregulated because there's $11 trillion company, one 11 trillion, one 4 trillion, and so on that want it unregulated. How do you distinguish between medium and high risk assets? That is a good question. That is a question that we'll talk about more on Discord. I can't really answer that. But generally speaking, it comes down to market cap. It comes down to a lot of things to research is much of it. The first thing I always look at is the team. But there are a lot of other factors that I can't really discuss now because it's just way too complex. But the team is one of the main things. If they have an anonymous team or a team that has absolutely zero experience or a team that has a bad track record, that's my first major warning sign that it's a high risk asset. If it has a very low market cap, if there's only like a few million invested in it, in the whole crypto space, that's something that I would consider a high risk asset because it hasn't really grown yet. So it could just collapse at any moment. But there's a lot of other factors. Say I have 5K to invest in medium risk assets. Would you recommend buying 50 coins for 100 or 5 for 1,000? It's a tough question, really. I wouldn't buy 50 coins for 100. I'll tell you that right off the bat. But I also probably wouldn't limit myself to 5 for 1,000. There's no like specific number, but give yourself some like diversification. Maybe like 10, 15 coins, something like that. 50 is crazy. That's too many. I don't think I own 50 coins. Maybe I do, but probably not. I think like off the top of my head, I probably own about 30 at any one time, but I have like a fair bit of funds. Yeah, I'd say like 10, 15. You'd split 5,000 up into. Do I prefer trading cryptos or buying and selling? I personally prefer. I Is my internet off? Sorry, got distracted there. My internet was off on my phone. I thought maybe I was missing questions. So yeah, do I prefer trading or do I prefer buying and selling? I prefer buying and selling. I prefer to hold the crypto myself. I trust it more that way. But it really just depends on what I'm doing. If I just want to if I think Bitcoin's going down because it hits a significant resistance area and I think it's going down, I'll just pop in a trade there because you can't really short Bitcoin. I guess if you hold Bitcoin, and Bitcoin is just an example, just replace Bitcoin with whatever crypto you want. If you hold Bitcoin, you can sell it. That could be your short. You could sell it and buy back cheaper when it drops down. But I don't really like doing that. If I'm getting into a short Bitcoin trade because I want to sell a resistance area, I'll actually open a trade. If I want to get into like a short term kind of like just a day trade or a few days trade, I'll just buy on a broker like 8cap. But if I want to hold for more than a few weeks, I'm not going to mess around with brokers. That's when I'll actually buy the asset. I prefer to buy the asset overall because then I actually own it. I can put it in my wallet where it's safe, relatively safe, I believe. Hopefully. I shouldn't say that. It is safe because I take a lot of precautions. And we'll probably do a webinar on wallet security and how to keep your wallets safe. Because wallets, you can't get into wallets. The way people have money stolen from their crypto wallets is through user error. So you have to be on the ball with that, which we'll probably do a webinar in future about that. Yeah, I prefer to hold cryptos in my wallet. And that way it's mine. It's my asset. And I can buy it. I can sell it at any time. And I have total control of it. And it's just a personal belief thing, really. I like having control of my own assets. That's Yeah. Yeah, that is the last question, I believe. I'm not really seeing any other questions. Lewis hasn't sent me any, so I think we can wrap this one up, guys. We've been going for an hour and 20 minutes. I think that's a good time for a webinar. I really hope you guys learned something over the last 3 days. Like I said, this is just an introduction to crypto. I encourage you to join the Discord group where we discuss and share cryptos. Follow me on Twitter. I'm not that active right now, but I will be more active on Twitter. I've just been crazy busy lately. So let me just quickly bring up my Twitter account. Follow me on Twitter. I'll be more active there. Also going to be active on the Discord channel. So that's my Twitter. Follow Lady of Crypto on Twitter. She's a sort of member of our team, sort of. I wouldn't really call her a full-on member. Lewis and George are full-on team members, but they're not that active on Twitter. But I'll give you their Twitter anyway. Follow Lady of Crypto. She's crazy good with gaming cryptos, although most of her stuff comes from me. Don't tell her that. Follow Lewis on Twitter. There you go. And finally, last but not least, I'm just going by activity on Twitter. Follow George on Twitter. Check him out. But the most active of those four is certainly Lady of Crypto. Twitter is a good place to learn crypto, to kind of get exposed to the community. You might see a lot of things there that confuse you, a lot of terminology, but it's a good place to kind of get exposed to the community, to what is crypto, and it is indeed a pretty unique community, the crypto community. There's a lot of stuff there that you might just not get. There's a lot of stuff there that I still don't get. I don't really care that much about not getting it. I'm essentially here to make money. So, whatever. There are some crazy people out there on Twitter. You don't really have to pay attention to them. But, yeah, check it out. Get yourself kind of involved in the crypto community. And I think you'll learn a lot. Just don't... just be careful. If it sounds too... No. See, that's the rule with crypto, right? Like, that's the rule with normal stuff. If it sounds too good to be true, it probably is. But with crypto, if it sounds too good to be true, it might actually be true. So that rule to live by, that if it sounds too good to be true, it doesn't really work anymore. Which is kind of crazy. I find myself often sounding like I'm a scammer when I say to someone that I've made 700 times return on this crypto or that crypto, but that's just this market. It's absolutely absurd and crazy. So the rule I was going to tell you, if it sounds too good to be true, it probably is. Probably don't use that rule because it doesn't apply that much in crypto. But just just be sensible, guys. No one's going to give you free money. That's the big one. Once you get on like Discord groups and stuff like that, Discord groups that aren't ours, but then again, ours can have that too. We can have someone come in that is a shady character and that DMs you and that offers you free money. We'll try our best to stop that, but it can happen. We can't stop everyone from doing that. You just have to be sensible. No one's going to give you free money. If anyone ever asks for your wallet seed, it's a scam. There's no legitimate reason for anyone to ever ask for your wallet seed. And, you know, that's one of the things that you just really, really have to drill into your head. Your wallet seed is sacred. It's only for you. I said this in the webinar, in the first one where we discussed wallet seeds. If you're talking to me and you have a lot of faith in me, if you do, I'm not saying you have to, I'm just saying if you do. If I say, hey, Bob, what's your wallet seed? I need to, you're asking me for help on something, and I'm like, well, give me your wallet seed and I'll help you out. That's not me. That's a scammer pretending to be me. That happens in this space, unfortunately. So you have to constantly be careful with stuff like that. No one's going to give you free money. No one's going to ask for your wallet seeds. It's just not happening. So yeah, that's it, guys. That's it for today's webinar. I've rambled on a bit too much towards the end here. Thank you guys very much for attending. I hope you guys learned something useful in this crazy space that is crypto. Get in the Discord group. We'll be talking more and more. I'll be doing more webinars in the future where we'll cover stuff in more detail. I'll try to get a video done sometime this week on how to place stop losses and take profits on Binance. It's something that I know I need to cover, and I will try my best to get it done this week for you guys. There's plenty of videos out there on how to do it. You don't have to wait for my one, but I'll try to get one done. And yeah, that's it. So thank you guys for watching, and